Okay, we're gonna start the presentation. Okay, hello everybody. My name is James Montoya. I'm software engineer. Currently pursuing my master's degree in software development in artificial intelligence at Torres University. With me here is my colleague, engineer Favor Madu from Nigeria. Together, we are gonna go through this presentation that is be talking about how the figure of the banks will change due to the digital disruption in the financial service. And I want to start this presentation with these questions. Are we close to see the end of the banking as we know it? Right now, the banking sector is facing challenging times due to the high competition in the disruption financial market. In this presentation, we will describe how the banking sector has been changing over the last years due to the digital transformation. Also, we are going to talk about the forefront technologies and the appearing of new competitors in the financial disruption. As we can see this in this picture, banks have been with us for a long while. It could be said that the banks offer society a type of organization to sort out transactions and have the confidence to do safe business. Many of the decisions we make on the daily basis require the service of banks. If you need, for example, to buy a car or buy a house, also if you need a loan to study or you are starting to work, for example, all of these four needs a banking in these situations. That's why if we think in all the situations that that a bank is going to interfere in our life, is going to be endless. Okay, and now we have always seen banks as a physical entities. Is that place where to go when we need to do a transaction. However, lately, there is a trend that the physical figure of the banks is disappearing, mainly due to main two factors. The first one, we can say that the banking digitalization is creating a trend of closing banks branches around the world. Many people prefer to access banking service through the internet or mobile application instead of visiting physical branches. As much banks virtualize their service and products, the need to have a physical branches will be unnecessary expense for banks. As an example of this, in Great Britain, between 2015 and 2016, more than 100 branches were closed. The same phenomenon is happening in Germany, Stockholm, the Scandinavian region, and more countries in Europe. The second could be that due to the digitalization and new tendency of emerging competitors is appearing in the field. As we can see here in this picture, fintech, that means financial technology, and big tech, that means big technologies companies such as Google, Amazon, Apple, or Microsoft are now competing with banks. That means that, for example, if any of these, for example, fintech or big tech, create a new application that is based in the financial service, easily one of these new innovations could replace a bank. Today, the new technologies are changing the business around the world. Technologies such as cloud computing, blockchain, artificial intelligence, and quantum computers are changing the whole world. Every year, new startups are created that are revolutionizing the existing financial market. With us, we are gonna go through some of these technologies. The first one is cloud computing or cloud banking. This is a technology that allows to remote access to software, data processing, and file storage through the internet. It does not require the installation of application locally, but instead offers service on the large scales thanks to the cloud connectivity. There are several advantages to using cloud computing for banking sector, but perhaps the following three advantages could be the most important. The first one could be the cost benefit that is related to the amount of money that banks are spending right now in create the whole infrastructure that supports the technology or the application that they are creating. The second one is related to the scalability that is related that we can imagine that is in the way that, for example, if we need to increase the service or the capacity of our service in product or in service, we need to also infrastructure that supports the new technology or the new service or new products that we are creating in the banking sector. And also the last one, it will be the security that is regarding there is in this specific item, the security, there is a low percentage of financial institutions that have migrated to the cloud-based technology solution. According with the Digital Trends in Financial Service Report 2018, there is still a fear related to the migration of this new technology. The fear is related to the possible data breaches which do not occur in the regularized and protected environment that is the environment that is using right now the cloud computer. Now companies like Amazon, Microsoft, and Google and Alibaba have taken advantage of these technologies, and they are increasing the security and putting like high standards of protocols to protect customer data. The second technology that we want to talk here in this presentation is blockchain. Perhaps many people recognize or know a little bit about blockchain related to the Bitcoin. We can say that the technology behind Bitcoin is a blockchain. This is a technology that allows the creation of new networks of device without needing of the server to centralize the information. The blockchain information structure can be interpreted as a ledger where all transactions such as purchase and sales are recorded. The process of inserting a transaction requires the approval by the rest of the blockchain network nodes, which are the users of these blockchains. Once the information of the blockchain had been changed, it can no longer be deleted. Only new records can be added. There are four main factors on which blockchains can be implemented in the financial sector. The first one is security. The current database system of the banks are centralized. This is a server which safeguards and maintains the information. These systems are very vulnerable to the data leaks and data manipulation. Compared with blockchain technology, a disrupted database system is implemented. In this way, the information is incorruptible, since it will be necessary to alter all the data of the blocks, a task that is so far impossible, since at the first alteration could be alarm will be generated and the fraud attempt will be discovered. Another factor is the commercial financing. Blockchains allow the creation of approved secure financial documents in real time. This could be very beneficial for the creation of soft products or the use of communication in some specific process that require security documents. Also, financial transfers, payments and transfer transactions on the global scale will be very convenient for the banking sector. Today, there are like many, not too many, there are two well-known services that are doing like a transfer between banks around the world. The most common is SWIFT, and there is another new technology that is called Ripple, that is based on blockchain. And the difference between with SWIFT, you can see that the transaction amount and cost per transaction that is charging to the people that is using the service is very low compared with SWIFT. Now I let hand over my colleague Ginger from Nigeria.
My name is Nkechinyere Favour Madu. I'm here to make a presentation on my topic, which is how figure of banks will change due to digital disruption in financial service. I will start with artificial intelligence by saying what artificial intelligence is as one of the new forefront technologies. Artificial intelligence is a technology for the analysis of large volumes of data, which allows the identification of patterns in the data through the use of mathematical and statistical algorithms for the automation of decision making. Artificial intelligence can be used to carry out different types of descriptive analysis, which explain the past, the predictive ones, which anticipate the future by predicting what will happen, and finally, the prescriptive ones recommend what to achieve in order to reach a determined goal. Improvements in customer services. Concerning natural language processing, which is the NLP, sentiment analysis or machine learning, it will be possible to have advanced chat or voice conversation with customers and respond to highly complex queries. This will allow the analysis of communication with clients, identifying patterns, emotions, and entities immersed in the language. Based on data analysis, products and services can be created that adapt to each client's specific needs, according to Kotler in 2021. Another implementation is the use of robo-advisors to offer automated financial advice. These robots can offer investment products appropriate to the needs based on a client's profile. They can give notice of the following pending payments to be made or analyze spending patterns to indicate how savings could be increased or capitalized on assets. Improvements in processes and security. Implementation of document digitization and auditing, biometric authentication, liquidity risk management and improvement of the operational processes, fraud control by identifying behavior patterns that allow the detection of fraudulent behavior. Another technology is the quantum computers. The quantum computers are the latest technology that uses quantum physics properties to perform calculations. Classical transistor computers encode information in bits represented as 0 or 1. Their processes are executed deterministically with only two options that could be interpreted as yes or no. Their processes are executed serially only at the time. Unlike the classic computers, the quantum computer executes its processes in a probabilistic way and executes its tasks simultaneously all the same time, thanks to three properties: superposition, entanglement, and interference. It can explore various possibilities in a single run. Its basic memory unit is a quantum bit or qubit, which could be all combinations in between 1 and 0. This technology applied to the banking sector brings benefits concerning security, processing capacity, and highly complex calculations at speeds never seen before. Through encryption based on quantum mechanics, it will be impossible to break the security of banking transactions. This technology would also open a gap between its great data processing capacity, would expose the security of the current encryption systems of traditional computing, according to Costello in 2019. Another point to highlight would be the calculations of complex problems, such as the Monte Carlo method, widely used in banking. This method is a unique use to make statistical approximations of the properties of a system, which requires highly processing capacity and response speed. Another technology is the fintech. The disruption of the banking sector promises to lead to increased efficiency and security in financial products and services through cutting-edge technologies. When applying new technologies, work must begin to improve the customer experience by implementing products and services that adapt to customer needs. The digitization of banking is creating banks to become financial services applications that facilitate and improve the quality of processes, allowing them to improve the customer experience when using financial services and products. This change has created a new competitive environment in which they are faced with new ventures such as fintech and big tech, large technology companies in the market using these cutting-edge technologies. Concerning fintech, banks can create alliances, acquire this type of company, or work in association with them to create new and better products and services that improve the customer experience. On the other hand, with big tech companies, the challenges are even more significant because these companies will try to control user interfaces and use customer information to control financial markets. If this scenario occurs, banks will be relegated to becoming providers of products and services on distribution platforms that do not belong to them. This disruption should maintain stability in the competitive environment. Data ownership must be maintained and data portability between platforms to minimize cost and facilitate customer processes. All this digital change also presents a tremendous challenge for regulatory entities which must adapt to facilitate competition and allow the benefits of innovation to improve the system and protect financial stability. Control over consumer protection and data management will be the priority. Regulatory agents must establish who controls the data and guarantee security when carrying out transactions between different platforms. To conclude, regulatory agents must act decisively to guarantee the delivery of benefits to clients while protecting financial stability. And lastly, which is the conclusion, banks have since ancient times intermediating and promoting the economy of society. Innovation in the digitization of banking and new age technologies are creating a new scenario in which the physical figure of banks tends to disappear and is becoming a form of digital services, with which the end could be coming of banks as we know them today. In this sense, banking moves from a physical to a virtual world. It competes against fintech, startups, and large big tech technology companies for the financial market that formerly belonged to them, because banks' core has always been banking and not technology development. They must look for ways to compete in the world of technology through the acquisition or alliance with fintech companies, which could help them stay current and competitive in this new disruption scenario. Banks, together with the help of fintech, must make use of the latest technology to avoid being taken out of the financial market by large technology companies. Here I'll end my presentation. Thank you very much, and I still have some other references for educational citing. This is a group work by me, Nkechinyere Favor Madu, once again, a student of software engineering, and James. Thank you very much.